Okay, and now we will take a look at the fresh potato market overview. We start this by looking at the 2020 crop, which was harvested last fall, and we look at kind of a 10-year history of the supply and price market and the outlook coming up, and kind of see how that all fits together. So we always start this by taking a look at yellow potatoes. Yellow potatoes are one of the stars, so to speak, in the potato world in terms of growth right now. We've talked about this for a number of years actually now, and you can see the trend for the last 10 years since 2011. We're all the way up to 10.7 million is our current projection this year for yellow potato fresh shipments. Now you can see there was a little bobble last year in terms of a downturn below the 9.8 million of 2018. So that 10.7 is somewhat of a return to that former trend. And we'll talk about this a little bit in a minute, but is that trend going to continue? How does last year have an impact on it as it was down a little bit? But we're certainly seeing the demand situation in very good stead. So that 9.5 million from last year, there was a few reasons for that. The Red River Valley, which grows almost all red and yellow potatoes, they had a disastrous harvest, and while that affected the red situation much more heavily, it also had a little bit of an impact on yellows. Idaho was also down a little bit in their yellow production last year, so that drove some of this drop down to that 9.5. But again, as I said, you can see that trend pick up kind of where it left off. We're back up to that 10.7 million hundredweight projected for yellow shipments this crop year. This is the tracker. Those of you that have seen this before know that the background, the kind of light rose-colored background, is the 3-year average. The dotted line is last year's numbers, and the heavy red line, of course, is this year's numbers. This is to date. We're through the latter part of December with this look, and you can see a very balanced supply situation. We're up almost 10% versus last year. That's to date. And we're also up almost 6% above the 3-year average. You can see how those trends kind of move along for a period here from early October to the Thanksgiving timeframe. We were well above the shipping pace of the 3-year average as well as last year. It's now come to a more traditional type of level over the last few weeks. But again, we're moving this crop very nicely. Demand is brisk, and the crop supply is in a very balanced type of situation for positive grower return. So let's take a look at that kind of summary of this yellow potato situation. The average 10-year growth rate is 8%. Those of you that remember the last few years, we've talked about that 10-year growth rate being closer to 9 or 10%. With that little downturn last year, it's now stands at 8%, but still a very positive situation in the yellow potato sector. The growth rate versus last year is 12.6%, again, from somewhat of a nudge down number from the previous year, but 10.7 million versus 9.5 in the 2019 crop. And with this demand increase that we're seeing, this positive demand environment, the 10 5-pound bale price, if you use that as a proxy for return, right now it is up into that $16 to $18 range per hundredweight. Very, very positive return for yellow growers. We've talked about this in the past as well, that no single geographic region really dominates the yellow market. The large players are California, mostly Kern County, Idaho, and the San Luis Valley. But again, unlike the red market and the russet market, there's no really dominant player as Idaho is to russets and the Red River Valley is to the red potato market. And with this 1-year growth pause, we kind of have asked this question too in the past. Are we nearing that plateau that we've discussed in the yellow market, where it's nearing that supply and demand equilibrium? With what we're seeing this year, we believe that perhaps we're not there yet, but it always is something that we want to keep our eye on and have discussions about and strategically look at. So now let's shift gears and talk about red potatoes. Red potato 10-year supply trend, fresh supply trend to the U.S. for the 2020 crop, we're projecting at just a shade below 12.5 million hundredweight. That's up a bit from last year, but you can see that trend line over the last 5 or 6 years is in a somewhat of a downward direction. If you go back the 10 years, we kind of go up that hump in the mid-teens back in 13, 14, and 15, where it kind of peaked out and then started a little bit of a slow drop. Now, last year, you'll all remember, was an extremely difficult year for the Red River Valley. Their harvest conditions were incredibly challenging, and probably 35, maybe even 40% of that fresh crop did not get harvested. So that was one of the big drivers in that drop to the 12 million that you see last year. But there is, again, that rebound up to the 12.5, let's call it, that you see there on this chart. And let's look at the trends for the shipping pace so far year to date. You can see that versus last year, which was that down year for supply, we're up almost 8% year to date. We are behind the 3-year average by about 7%. But you can see, again, that shipping pace moving along very nicely. And again, looking similar to yellows, at a very balanced and positive situation going forward. Let's talk about a little bit about the kind of the roundup on the red supply situation. That average 10-year growth rate is actually turned slightly negative, not quite 1%, but negative 0.9%. That had been around 0 last year, and in previous years it had been slightly positive. So with those 2 years now that have been well below the previous years, that has turned slightly negative. The major shifts that are driving this this year, the 500,000 or so hundredweight increase, the Red River Valley is up 5%. Some might think that may be more after the disaster they had last year, but they also had some challenges at the end of this year's harvest, and it was exactly the inverse of what happened to them a year ago. A year ago, they had way too dry conditions, and this year's harvest, a year ago, they had way too wet of conditions, and this year's harvest, they had actually too dry of conditions. A lot of their fresh production acreage is not irrigated. It's on dry land, and so when it's too dry, you have a lot of challenges with bruising and too many dirt clods and that kind of thing. And so big challenge there. In fact, probably a couple thousand acres of that crop did not get harvested this year as well. Big Lake was up 30%, pretty big uptick there for the central Minnesota area. Colorado likewise, and Wisconsin up 18 and 20% respectively. The other big players in the red market, the other 4 major ones, Idaho, Florida, the Skagit Valley, and Texas, were actually by and large flat to last year's production. The other significant player in the U.S. market is what we import from Canada. And that looks like now we're projecting that'll be down about 20% from last year. Canada had some challenges in their fresh crop as well. And their overall fresh crop, we believe, is going to be down about 1 million hundredweight. And I think that's about 15%, down from about 6.5 million to 5.5 this year. But in the red sector specifically, it's projected to be down about 20% from last year. So what does that mean for pricing? Taking a look at that, we really see a stabilization in the red sector, that red price being more stable, i.e. less affected by supply shifts than ever before. And we really believe that the case that's happening there is that there's much higher utilization of the market information that's out there, the grower collaboration that is happening in the red sector, and all of those things we believe are leading to a more stable pricing situation and even supply situation going forward. The current pricing, again, using the 10 5-pound bale for a proxy, is in the $13 range, give or take. Red River Valley might be slightly below that, but their proxy size A tote price is in the $20 range right now. Let's move along and shift gears again. We'll talk about the russet potato sector next. And this is the 10-year trend for U.S. fresh russet potato shipments into the U.S. You can see, again, we're down to 68, let's call it 68.5 million for the 2020 crop. And that is down about 1.5 million hundredweight from last year's 70.1 million. Two years ago, we actually dipped below the 70 million level, just barely below it at 69.8. But again, this year is down again pretty significantly. There's some key drivers that happened with that. First and foremost, the acreage situation in the Columbia Basin was down, I think, almost 10,000 acres. And that's mostly processing, but it also affected the fresh acreage as well. And the same was true in Idaho. Idaho's acreage was down 13,000 acres. A lot of that was in the processing sector, of course, but some of it was in the fresh sector as well. And so that's some of the things that are driving this decrease here. And so again, all things being equal, we would look at this and say, we're going to look at a very balanced supply and demand situation. We'll talk about that more in a second when I look at the shipment versus price chart. But as we all know, things actually aren't all being equal this year with the situation with COVID-19 and the challenges that has presented to the potato market, not only in the fresh sector, but in the processing sector as well, and really all through the potato industry. And so we'll talk a little bit about the impact of that. So let's look at that chart. This one's a little busier than the red and the yellow charts, but I kind of wanted to follow not only the supply situation, but also the weighted GRI and how that correlates with the supply situation for last year and this year. The yellow dashed, heavy dashed line across the top is last year's weighted grower return index. That red dashed line is this year's weighted grower return index. And by weighted, I mean that's weighted by each area's volume. The four major russet shipping areas, Idaho, San Luis Valley, and Colorado, central Wisconsin, and the Columbia Basin. Those areas together probably ship well above 80% of the total russets into the market. So those are the weighted GRI areas that we're talking about, and they're weighted by the volume that each one ships. And the volume, speaking of the volume, those bars to the left are the blue bars. Those are actual for this year. The orange colored bars going forward past the end of December are our projections for volumes by week for going out for the remainder of this crop year. Again, just like the other charts, the dashed line across the top is last year's volume, the blue dash dotted line, and the light blue background is the 5-year average. So I think it's worthwhile to take just a little bit of a look at last year's a walk back in history. We all know a lot of the challenges that happened, but going into last year, it was a very positive situation. Started out, as it always does, with an increase in the GRI through the August period, but then as harvest starts to pick up, there's always that drop in pricing you see on that yellow line, all the way up until early October. And everybody remembers, especially in Idaho, what happened in early October. There was a very hard 3-day freeze that had a big impact on the remaining supplies that were left to be dug. And that dramatically altered the price situation going forward. And you can see it climbed to where it leveled off in that $12 to $13 range for a big chunk of the year, going forward all the way through the unofficial beginning of the pandemic in the middle of March. And what happened then, of course, is there was actually a little bit of a spike in not only the volume. You can see that spike in the blue dotted line. That's the volume spike that occurred, mostly driven by retail. But there was also a price spike at that time because of the retail increase in demand, and the food service situation had not yet taken hold, so to speak. The pipeline hadn't kind of been backed up as much as it did 3 or 4 weeks later. But then that came, of course, and that GRI started to drop along with the food service demand and the lockdowns that were happening. It did level off there around $9. But then it started to come back, as you can see, and that was driven by a few things. Actually, the processors, the frozen processors returned to the market and alleviated some potatoes that were hanging out there. The other thing that started was the USDA food box program, started in early to mid-May. That had a positive effect on moving some of those food service or previously destined food service potatoes. And the price did come back some. And by the end of July, it was back in that $13 range where it started this current crop year that we're in. So again, you can see it started off strong. As it always does, it dropped through that harvest window. But since then, it has stayed in that more of a depressed range, certainly well below last year. And Idaho, of course, is the bigger driver in that because of its weighting of volume shipped. And Idaho is also much heavier weighted to the food service sector versus retail than, say, a place like Colorado or Wisconsin. The Columbia Basin kind of has the same situation with their size profile, where it's more tilted to the food service side of things. But that food service decimation is the key driver going on with this price situation as we look at it right now up to the tail end of December, where it remains down in that $7 to $8 range on a weighted average. Again, because of Idaho's size, that's driven by the food service market there. But Colorado and Wisconsin, actually, it's more positive because of their heavier weighting towards the retail sector, which we've seen is probably up in that 9, 10, 11% range after that initial spike back in the springtime. All right, let's shift to talking about the volume and the price correlation. We kind of look at this every year. It's kind of fun to take a look and see what that correlation is, as we talked about the inelasticity of the potato market, whereas small changes in supply can enact significantly larger changes in the pricing or the return to the growers. So the average 5-year russet supply that we looked at in that chart at the beginning of this section, 71.5 million hundredweight a year. The all region weighted GRI for that previous 5 years was $8.10. This year, again, going back to that 68.5 million hundredweight, and the average weighted GRI to date for the 2020 crop is $9.53. So we say, what is that supply price correlation? And that 4% drop, that's the drop from that 71 million down to that 68.5. That 4% lower supply gives an 18% greater return. And the example that I often show, a grower can earn more harvesting those 96 acres at $9.53 than he would harvesting 100 acres at $8.10. Last year, if you recall, the situation was, or the projection at the time, that obviously changed subsequent to that because of what happened in the processing arena and with COVID-19 and the demand challenges. But last year at this time, the projection of a 10% lower supply to date at that point in the year gave a 63% greater return. So we've always kind of talked about that correlation being in that 5, 6, or 7 times range on the inelasticity of the market. So that 10% to 63% last year, that's about 6 to 1. This year, it's a little closer to 5 to 1. But again, historically, it's kind of traditionally been in that range both ways, by the way, that a small increase in supply would also have a more severe dampening effect on the return. With that, I'm going to finish up the slides and say thank you to everyone for your participation and joining us today. Again, you see our website portal there, and we will turn it back over to the main round here. Thank you very much.